You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
What do you think Tom says when he finds out that there's sunny weather in the Seattle weather forecast? What do you think the first, and I can guarantee you that whenever they say it's going to be sunny, this is what Tom will say.
Gonna mow my lawn.
Gonna mow my lawn. I don't know anyone who likes mowing his or her lawn more than Tom likes mowing his lawn.
You know, and you know why?
It's the electric mower.
I love that mower, but it is, you just think about a lot of stuff you don't think about because you're out there, it's mindless. I love that. So,
and it's much quieter now that you have the electric, green
and
monster.
Frankly, only the front needs to get done because I only water the front, and it takes like 40 minutes, so it doesn't take very long. So it's pretty easy.
All right,
big deal.
And it when the weather's nice, Don says, "Oh, thank goodness the yard care company's coming."
Touche.
You know. But I live in Florida, where here the grass grows like all year, and it's not.
And your grass is horrible.
It's not really grass.
Weird thing. I don't know what it is.
It's actually sort of an alien mutant grass that's made up of shards of glass that are painted green, and
they cut you.
It's St. Augustine. It's the worst grass ever, but it grows like a weed. So,
congratulations.
Given it's a plant, I guess that makes sense. 855-935-TALK. Hi, welcome to Talking Real Money. That is our phone number, so you can call us, and then we can talk about something other than mowing lawns. So give us a call, 855-935-TALK. And last hour, we had people hanging around, and we couldn't get to them because this is what happens. You got to call early. But we're going to go ahead and move now to phone calls rather than the topics we were going to discuss. We'll get to those too. But since she hung on for a while, Andy, it's your turn. Welcome to Talking Real Money.
Hi, Andy. And
you broke the board, didn't you? With that little noise, you broke the board.
It sounded like
it was like.
All right, so Andy, you make us look silly, but that wouldn't be the first time that's happened.
Oh, so really? You think that was? I don't think that was the first time that happened today.
I think now you're going to suffer because I'm going to either invite Don's guitar back on, or I've got a whole raft. I just found a joke book here in my library, which I will now go to.
Okay. No, we're actually going to talk about money stuff. We are. I'm putting the guitar down.
And here's a topic that's been coming up a lot.
Oh, I'm telling you, this is a big one right now, folks, and this is a stupid one. Holy cow!
It's dumber than asking me why Warren Buffett's on the sideline, because Warren Buffett is not on the sideline. Okay, he owns a lot of stocks. Okay, he hasn't bought a lot of stuff, but he's on the sideline.
I wish you'd say he owns a lot of companies.
He owns a lot of companies. Pardon me. And you're right, he runs a lot of those companies. Yeah. But here's the other one. Hey. This company's going through a stock split. Does this mean I should buy them now?
Is this the right time to buy? Because, oh my gosh, they're splitting. What does that mean? What does that mean?
So I think Apple's doing a 4-for-1, right?
Yeah, Apple announced at the end of July. So if you own a share,
you get another 3 shares.
Right, what a deal. You buy 1 share, get 3 free.
Yeah.
I think that's what people think.
But here's the catch. You get them at the lower price.
Yeah.
They divide the...
Apple's up since they announced their split in the end of July, beginning of August.
Yep.
30%.
Yeah. Right.
Okay, that's not
Makes sense.
That's based on the stupidity of the split. That's not, Apple didn't grow 30%.
Whoa, Apple doesn't go up 30% every month? I thought it
Well,
like
wait
Amazon.
a minute, let's do the math on that. What would be that average annual return?
We're getting closer to 400% a year there.
Yeah,
That's a pretty good return.
But But not to be left out. As a matter of fact, they're not going to take a backseat to anybody. Tesla announced on August 11th, a 5-for-1 split. How much do you think their stock has gone up since announcing a 5-for-1 split?
It's gone up faster than the SpaceX rocket.
2% in 3 weeks, 2 weeks, a little over 2 weeks.
Yeah.
Okay, now here's what people think.
What about people had options on all that stuff? How's that work out?
Here's what people think. I heard this when I was a stockbroker 40 years ago. Here's what people think. If I buy it today, I get all of these extra shares. That's not the way it works. Tesla today is at $2,200.
Crazy.
If they split the stock tomorrow, your $2,200 would be 5 times bigger. You'd have 5 times the shares. So let's say you had one share. You had one share at $2,200. They would split 5 for 1, and you would have $400 and some odd dollars now. So you would still have exactly $2,200.
No, it doesn't feel that way. I'm a lot richer now. I buy the one and I get 5, right?
This is dumb. It's nonsensical. And that's one of the problems with the way most people invest. Call and don't be those people. 855-935-TALK.
Are talking real money.
At Vestory, we want to help everyone reach the best financial future. That's why we offer free meetings with our advisors with no obligation and no sales pitch. Set up yours today at Vestory.com or call 800-386-3004.
For your real life and real future, Tom and Don are talking real money.
And we do it every single Saturday between noon and 2 on the West Coast and 3 and 5 on the East Coast. So you know that we'll be here for your calls and to converse with you. 855-935-TALK is our phone number. That's 855-935-8255. It's really easy, and we really do want to talk with you about all kinds of things, particularly those things that are important to you. And please call before you do something. Just get another opinion from us, okay? Before you go buy whatever it might be, just call. You don't have to do what we say, but you might get some input that'll help.
Sounds a lot like home. Okay.
I was just going to say. All right. So, Chris, you're up next. Welcome to Talking Real Money.
Hello, Chris.
Hey, guys. Thank you for taking my call. I'm new to the whole investing thing, and I was just curious, as a first-time investor, what stocks would you recommend I invest in, and how much money?
How old are you?
27.
Cool.
And do you have earned income?
Better. He's 27.
Yeah.
You got some, right,
Chris?
I make about 40K a year, I guess.
Yeah.
Something like that.
Earned income.
Okay. And do you work for a company that has a 401k plan?
Yes, I do. Mm-hmm.
Wow.
Okay.
All the right answers.
Do you know if they provide a match?
Yes, they do.
Oh, see, you've given him all the right answers. Tom gets excited with all these right answers. As a matter of fact, you can hear him humming in the background.
I know. I had to shut that off. So here's the thing. Here's what I would do, at the very least.
Yes.
As a start.
Oh, gosh, I'm dying to hear this.
I would at least invest up to the free match that the company provides, whatever that may be.
Yep.
It's usually some percentage. Save that amount. And here's how I would save it. I would look at the funds available in the 401k, and I would use the index funds. They'll be labeled that. And if they do not have that, then I would just use one of the target date funds, right? Because your 27s, we're talking 20 years.
2060.
20, something like that. And I just start putting that money in. Then after that, if I had additional money, then I would start a Roth IRA. You could do it at Vanguard or at Fidelity. And again, own a widely diversified index mutual fund.
Right. No individual stocks, okay? None whatsoever. That is a terrible habit that younger investors find themselves getting caught up in because they think that's what investing is, because that's the game you played in school, right? You played the stock picking game?
Yeah. Mm-hmm. Yeah.
Yeah. It's the worst lesson.
Well, and a lot of your contemporaries are doing it at Robinhood. They're buying slices of stocks at Schwab. It's a lot of nonsense. Don't get caught up in all that. The right thing is set something aside, invest it in a broadly diversified portfolio, and leave it alone. And that's the best advice we can give any young person.
Yeah, and let me just ask you one other question. Do you have stuff you like to do in life that doesn't involve picking stocks? Do you have things you like to do? Yeah, well, if you do this this is set and forget investing. Literally, you set it, you forget it, except maybe to rebalance. But if you buy a target date fund, you don't even need to do that. So I would do exactly what Tom says and then love living the rest of your life, because if you do this, you're not even going to have to sweat retirement. Not at all.
And you won't be able to call us back in 30 years to tell us how it was bad advice.
Right. I'm going to change the name of these target date funds to the Target Date Don'll Be Gone Fund.
Exactly. Bye-bye.
The target date, Don's no longer alive. If I hear a 2060 target date fund and I go,
ain't going to happen, my friend.
104? No, not going to be here. 855-935-TALK, our number. Kent, you're up next. Welcome to Talking Real Money.
Hey, Kent.
Hi. Had a question on an earlier comment about the robo funds. And a couple of years ago, I looked into the Schwab robo fund, and the little secret that they don't tell you, now things may have changed and it may be different with non-Schwab robo funds, is they kept 40% in cash in the Schwab bank. So only 60%.
4%.
Well, okay, maybe things have changed, because when
we've known about the Schwab product since literally it came out, because we were using it
prior to it.
Yeah, and it's been, since they brought it out, it's been 4. Because if it was 40, holy cow.
That would be a drag on performance.
Yeah, that would really suck your
especially today when money
down.
markets are paying 5 basis points.
Let me just give you that though. 4% in cash, forcing you to keep that in cash, is a little bit disingenuous of Schwab. It's a tricky way for them to make a little more money, because they're able to make money off that spread. But they got to make money some way, I guess. So,
yeah, but it's like a 4% load.
Again, well, you could go
4% isn't earning any money.
Right. It's not earning any money.
Okay. So then if you don't, that approach, I believe, provides slightly better diversification than Acorns, for example.
It's a little bit better, but it's close.
So, because Acorns, I don't think, has all that money in cash.
No, they do not. Acorns requires no cash. It's just $1 a month. That's their fee.
Yeah, it's just because I know Schwab has.
So if your account's $100,
and they want to make money off their bank.
Yep.
Right.
That's right.
Right.
By the way, that's where most of the major custodians are making it today. Most of them.
Yeah.
By having money in cash.
Well, I'm glad I'm wrong.
I'm
glad it's 4%, not 40.
Not the 40. But even 4% would be a fairly significant drag on performance over time.
It is. I don't like it.
No question.
But it's the price we pay for this free game. And when you really crunch the number, though, compared with paying 1/4 point to Betterment or Wealthfront, it's probably apples and apples. It's probably very comparable, because they're not charging you a management fee. You get free management, but you pay for it with the spread they make on the 4%. And when you're able to lend it out at 3 or 4, and you're paying people 0.1 on 4%, that probably
0.05.
Yeah, that probably comes out to about, on average, 1/4% over the entire portfolio.
You raise a very fair point. I mean, I think it's the alternative, of course, is going to Vanguard or to Fidelity and owning one of their global stock portfolios. So you can get, I forget what the VT wax is now, Don. Is it 15 basis points?
Well, but the other thing you can do, though, you've got free accounts out there in which you can own VT, for example, just the Vanguard Total World ETF.
Good point.
At next to nothing. So I don't
You
know.
could do that at TD, I think, right? Yeah.
For smaller investors, I don't know how much these robo-advisors are even necessary because you can get great diversification with a couple
Yeah.
of funds, and you can get it at no cost and no requirement that you keep anything in cash.
Yeah, exactly. Your point is well taken.
Thanks for the call, Kent. We appreciate it. 855-935-8255 is our phone number, 855-935-TALK. Call. Join us. We'd love to talk with you. We'd love to help you solve some problems. We'd love to help you improve your life, improve your future, make all of this a lot easier because I know you have a life to live and you don't want to spend all of it dealing with or worrying about money. 855-935-TALK. We'll be back in a minute. Don't go away. Glad you're there.
Tom and Don are talking real money.
If you're sick of your self-interested financial advisor and are looking for a 100% fiduciary low-fee investment advisor, call my firm Vestory at 800-386-3004 or visit us at vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
All right. Thanks for calling us. Look at all the people calling. 855-935-TALK. And remember, if you don't get through to the show, you can call 24/7 and leave a question to be answered on a future podcast. But that means you have to listen to the podcast. That's the only price. You have to listen to the podcast. 855-935-TALK. What?
Late calls on the show, the same as the Swallows returning to Capistrano, the same as the rain coming down heavy in Central Florida in mid-afternoon. Right?
Yeah, look at all the lightning strikes
My
here.
goodness.
Holy cow.
I think you should duck.
I'm in the studio, so I don't know. I mean, I'm like almost soundproof. I can't hear the neighbors blowing leaves like you can. Exactly. 855-935-TALK. Give us a call. Oh, let's see. Who is next? Oh, Andy's back. Hey, Andy. Welcome to Talking Real Money.
Thanks for sticking with us.
Hi.
Thank you for taking my call again. I think you answered my question, but I just want to make sure I understand. So if we have a chunk of money that it's just sitting in a savings account and it kind of built, we know that it's making like the money market amount, which is very little.
Mm-hmm.
If we open an account at Vanguard, right, we just go to their website and do that, or do you need to go through Charles Schwab?
No, you can go right straight to Vanguard and open an account. On their website, it's really easy. But what do you want to do with the money? What are you going to invest it in once you get there?
So that's my question. You keep saying what it is, and I'm never at a place where I can write it down.
Well, the thing is there is no answer that's right for everybody. We need to make sure that that's really clear, that we usually tell people who have a long time and who are going to be patient with their money and won't panic when the market goes down to put money into the Vanguard Total World Stock Index or the combination of stock indexes at Fidelity. But it depends on what you want the money to do for you.
Oh, okay.
Is this long-term money? Is this short-term money? What are you trying to achieve? I guess I'd put it that way.
Okay, we are hovering over, being able to retire in maybe 2 years. We have investments, but I'm not real comfortable with where we have a lot of our investment, and I keep listening, and you say, are they a fiduciary?
Fiduciary, yeah. Fiduciary. I know that's a tough word. It's a stupid word.
It is a hard word.
Come up with a better one. Yeah, I agree.
I know they are, but I think that we're in one of those groups that's also charging us a lot of fees, and we need. Andy? I don't want to put any more money there. I'd rather go somewhere where.
Can I ask you a question real quick about? Do you know the names of any of the products of the investment products you're in with this other place?
You're gonna cringe.
Yeah.
Okay, you guys are gonna cringe. We have annuities.
Okay.
And yeah.
And what else?
And okay, what else? Let's see here.
We're not going to come to your house and harass you.
Really,
we're curious.
We're nice people.
Okay.
Kind of.
Yeah. Speak for yourself, right, Tom? Yes, ma'am.
Let's see here. First Trust, Val something.
Yeah.
Am I making any sense here?
Yeah, you are. And let me tell you, they may tell you they're a fiduciary, but they're liars.
Well, we know, and I shouldn't say we know this. JP Morgan, we just, out of lack of time, we haven't changed, but we need to change, and we know this. Thank goodness it's not all our money. But
yes, you need it. But here's what you need. And really, let me make this a whole lot easier for you. I'm going to really simplify this because right now what you're doing is what I call, here's another weird word, hodgepodgery. You're hodgepodging your portfolio. You're kind of flailing in the dark, trying to figure out where this money should go without a plan. You don't have a plan. You got to get a plan. You really do. Go to talkingrealmoney.com/help. There's a bunch of great information on there on how you find a fiduciary, how they charge, how you get started creating a plan. You've got to have a plan first, and you need more guidance than we can give in this show.
Tom and Don are talking real money.
Did you know I wrote a book? Yeah, about 10 years ago, I wrote a book about investing. Financial Physics, with an F, How Money and Investing Really Work. It's a short read. It's a really easy read because, well, as you know, investing is way too easy to be this complicated. And it's been on sale for a long time at Amazon. I updated it in 2018 to a new version. But if you don't want to buy it, you can go buy it at Amazon. It's $10. But if you don't want to buy it, if you want it free, well, you can get it free two ways. One, you can get a PDF copy by going to talkingrealmoney.com/free. talkingrealmoney.com/free. If you don't put in the /free, you can't find it. The other way is if you have an iDevice, like an iPhone or an iPad or a Mac, you can go get an interactive version of the book, a special edition that I made that's actually interactive, that's got videos and motion and things going on. And that's also free. Just look for Financial Physics, FYSICS, in the Apple Bookstore or Apple Books or whatever they call it now. Or go to talkingrealmoney.com/free, talkingrealmoney.com/free. And I guarantee you'll enjoy the PDF or the iBook or your money back. Check it out, talkingrealmoney.com/free.
Reality radio for a really great future. We're talking real money.
855-935-TALK is our number. Not long ago, in fact, it was just a couple of weeks ago, I created a new page on talkingrealmoney.com to try to put all this stuff we talk about in one place, and it's talkingrealmoney.com/help, as I mentioned to Andy. And on there we have the advisor interview form, how to interview an advisor, talks about most of the people not being fiduciaries. We actually researched a number of investment advice providing firms with their fee structure. We gave you a few advisors to check out. We have the Vanguard study on the value of an advisor, et cetera. So you can find all that stuff at talkingrealmoney.com/help.
And before I hired anybody, I'd want to know that they're 100% fiduciary all the time, not duly registered, that planning centric, that the plan, as you mentioned to Andy, before you go running off to Vanguard or buy any, you don't need, that's step number 50. There's all the work that comes before that, especially close to retirement. Those two things, and that they don't want to charge you more than 1% a year.
Everything must start with a plan. And there are so many studies that have shown that those who start investing with a plan, even if it's a very simple plan, enjoy a far higher level of success and become far more, have much more money than they would have otherwise because they don't do dumb things along the way. And we all do dumb things. I'm not saying anybody, and I don't mean for any of you to feel badly about the things that you've done because you didn't know better. We want to teach you how to do this better. That's the whole reason for our existence. It's the whole reason Tom and I have been doing this for like decades. We're old. 855-935-TALK is our number. And Dan, you're up next. Welcome to Talking Real Money.
Hello, Dan.
Tom and Don, good afternoon.
Hey, you're in good voice. You sound like a radio guy or something.
I appreciate that. You were talking earlier today about the podcast. and there are 462 currently posted. And yes,
this is now. Remember, I want to
one.
interrupt you, Dan. Remember, I referred to the gentleman earlier who listened to every podcast. This is that gentleman.
Okay,
Dan, thank you for that. It's very kind of you. I mean, anyway, so it's 462. You were saying,
yeah.
And if people haven't taken the time to go back in history to listen to some of the older ones, they're missing out. In fact, podcast number 11.
They were a lot better in the old days.
no, that's not what he's saying.
kidding.
Keep going, Dan. You're doing fine.
Joking.
Podcast number 11 was one that sticks in my mind because a lady was asking for
come on.
reading material. No, I'm serious. And you introduced her,
Wow.
pointed her towards Apollo Lopescu. And I've
Yes.
become I've listened to him, found everything I could on him, and listened to him a couple times with the vestry events, and have become a real fan of his message and the way that he explains what's going on in the market and how what proper thinking is, I guess, it would be my phrase for how to invest, what investing is. So I encourage people to listen to the podcast. You don't have to listen to all 462, but the ones in the past still have a wealth of information. And
you know, you can't go to the movies. You really aren't going out. You know, you might as well just sit around all day and all night listening to Talking Real Money. I love that idea,
and
Dan.
you are Dan's a kind soul. And when he told me originally earlier this year they listened, or late last year they listened to every podcast, it blew my mind. So that's very kind. And yes, Apollo Lopescu is somebody that I do think you should follow because I think Apollo takes things that are kind of hard to understand because he's a PhD and he turns them into things that I can understand. For me, that's the part I really like about him. So I think we'll try and get him back at Retire Meet 2021, which is going to be a virtual event. It's going to be kind of weird, but we'll work.
Yeah, but it's going to be a virtual national event.
No, global.
Global. It's going to be a global event.
We have a lot of listeners in China and stuff.
We get calls out of
Dan,
England.
it is a pleasure to hear for. But before you go, how is retirement working out?
Well, I'm not quite there yet.
Okay, I wasn't sure.
Now I've got myself another 15 to 18 months, and I'll put my feet up and just enjoy life.
He'll put his feet up and listen back to all 462 episodes.
We'll do some more podcasts. We should just do some for Dan. I think some private podcasts.
There you go.
Or something. So,
Dan. Did you listen to all the Money 30s?
Probably.
I have not listened to all of those yet.
Okay, you got Money 30 to go back to.
There you go. Something to look forward to.
Those are some of my older ones.
There you go.
All right.
Yeah,
Thanks, Dan. We appreciate it. We have a break staring right at us. We got to go to this, and then we'll get back to the phones. There's still time, though. Give us a call. 855-935-TALK, 855-935-8255 to get answers to those important financial questions.
Tom and Don are talking real money.
At Vestory, we want to help everyone reach the best financial future. That's why we offer free meetings with our advisors with no obligation and no sales pitch. Set up yours today at Vestory.com or call 800-386-3004.
For your real life and real future, Tom and Don are talking real money.
This is why I know that there are more than 462 episodes of Talking Real Money. Because the number one episode was put online, and hold on, I just had it and I just lost it.
1887.
No, not that long ago. There, Tommy Boyd. Episode 1 was September 22nd, 2017. That was only 3 years ago.
How you go? Do you know how to go back and find all those by number?
I found them, but that was on our where we host them. But I did find out episode 11, for those who want to find it, is entitled. Inclusive, yeah. It's entitled "Your Own Worst Enemy." That's episode 11. So it was dated January 22nd, 2018. January 22nd, 2018. So
So
that
why
was back.
We should have more podcasts than that because we were on Como way before 2017.
I don't think we were putting them up as a podcast back then, is what I'm saying.
Really?
I don't think
Wow.
we have the audio of those shows.
Well, that's a great loss to humanity.
I
right
know.
there,
I think
but
they've been
okay.
lost to the ether. And that was back, episode 11.
They're traveling somewhere on their way to Pluto now, and they'll work their way back.
Episode 11 was back when I would take the 2 hours of the show and compress them into one podcast. So it's an hour and 11 minutes long. Then I started splitting them up so they were only 38 minutes long, which is more comfortable for a normal drive.
And for those of you who have not heard the podcast, you probably don't recognize my voice because Don usually edits me out of the podcast, so you have to hear me on Como.
No, actually, I think out of that hour and 11 minutes, you got 10.6.
4 seconds?
10 minutes, 6 seconds.
Seconds? Oh,
10 minutes, 6
right.
seconds, yeah. Just almost that.
All right, I gotta ask you a
855-935-TALK.
question.
Wait,
Go ahead.
855-935-TALK.
Over the long haul.
855-935-TALK.
Yeah, it's
What?
a good time to call, by the way, because we've got a little bit of time here.
Somebody hung up?
Over the long haul.
Yes.
Over the long haul.
Mm-hmm.
Have you made money being invested in real estate? A. B is gold. C would be stocks, or D, bonds. Over the long haul, 10 years or longer.
Is this
10 years or longer.
based on my knowledge of what the markets have done?
I have no idea what it's based on. I just
I
thought
would
I'd
say
ask.
absolutely stocks. Over the past
Yeah.
10 years, you would have made
And
more
yet-
money.
And yet, if you ask our audience, if you ask the public, Bankrate just did a new survey. They do this every year.
Yeah.
They ask you which, for a 10-year or longer period, makes more. Now, this year, for the first time in 4 years, people said, aha, yeah, stocks. 28% of people said, yeah, stocks make more.
They actually thought that that real estate made more money historically.
Last 2 years before that was real estate.
We are so out of touch. You know why people think that? Because they've got in their heads that real estate is this magic money making machine. That it really isn't. After inflation, the average annual return for real estate has been under 2% per year.
That's like one. Now remember, that's including the entire country. Because you say my
Right.
neighborhood makes 10% a year. I just read that Seattle again, and it was in the paper again yesterday. Seattle is either the hottest real estate market or among the hottest real estate markets again.
Right. But
And
there
so
was a
people
time
think,
when
oh,
people
well,
in
it's easy.
Phoenix were going, ours is the hottest real estate market in the country.
Wasn't there a time in Florida when they said that too?
Yeah, gosh. We had a time here in 2007 where condos were going for $400 a square foot. Ridiculous.
400 a square foot. That really, anyway.
Yeah.
No, stocks, number one.
Yeah.
Bonds, actually, number two. Real estate, number three, and gold, number four. Sorry to.
Gold is a terrible investment.
I know, but people are buying it again.
It's terrible.
The
It's
world
dumb.
is upside down. I got to own gold.
855-935-TALK. Remember, you can call that anytime, 24 hours a day, and leave your question. Or you can call us during the show, and we'll talk live. Mary, you're up. Welcome to Talking Real Money.
Hi, Mary.
Hi, can you hear me?
Indeed.
We hear you great.
Okay, well, my question is this. We've done pretty well in the stock market through no fault of our own. We bought some Microsoft about, I think, when they first opened, and we have several $1 million of that. But we're thinking about gifting it straight across to our grandchildren for school, but without cashing it out, just opening their own account. In fact, we actually have done that a little bit already. And I'm wondering, is that a good way to go so they can grow it for a while? But because of the COVID and the recession, their parents aren't working and they need money now. So I'm kind of wondering what's better, to give the stock or and let them cash it out and pay the tax, or for us to cash it out and pay the tax?
Oh, gifting appreciated assets. It is not a way for anybody to duck capital gains. It can't be done. But if you gift, and here's it gets complicated because we have two different kinds of taxes we're talking about. We're talking about capital gains tax, and we're talking about gift taxes. Because there is actual.
Yeah. Okay. Sorry.
Well, no, that you can give money each year, and you also have a lifetime, one-time estate exemption. But then by using up some of that estate tax exemption, you may reduce the amount that they can take out after you're gone. I think that if they're in a lower bracket than you, then it's better to gift them the money and use up your lifetime estate tax exemption probably. If you're in a lower bracket, then it's better for you to sell it. So it's going to require
You're
some
saying
tax
give them the. I want to make sure I
either give them the asset if they're in a lower bracket.
Asset. Okay.
Or
and then they sell it, create the cash, and pay the capital gains
because
tax
their cost basis is going to be your cost basis.
Right.
Make sense?
I understand that. Yeah.
So what you have to do is figure out who's going to pay the least tax.
Well, they are.
Okay.
Yep.
Then it's better to give them the gift, but be very careful about keeping track of this. Make sure that half of the gift is given by you, half of the gift is given by your spouse. You might
do each one could give a lot.
Yeah,
sure,
and then you want to give to each member of the family, like give to the husband and give to the wife. That allows you to give more without kicking into that lifetime estate exemption.
Which is still $11 million on the federal.
Right, but she's, who knows?
We're not looking at $11 million.
Okay, you're good.
All right.
No, way less.
Congratulations, that's great. No, very.
Yeah, well,
yeah, it's 15,000 per person
the number
per year. Yeah,
per year. So you can gift all that, and then they pay the capital gains is what we're trying to get at because they're in a lower capital gains tax. And by the way, if I was thinking about doing stuff like that, I would do that this year because my guess is next year you could be looking at an increase in capital gains tax rate. That's just my guess. I don't know.
But let me throw another thing into. Remember that if you leave an appreciated asset to your heirs as part of your estate, they get this wonderful thing called a stepped up cost basis.
Well, and again, that's also being debated at the federal level because
for now,
presidential candidates.
I'll
get rid of the step up.
Anyway. We know what we know.
I agree. I take tax policy as it is today.
Yeah. We know what we know. All right. Thanks for the call, Mary. Good luck. Congratulations on your luck. She's very lucky.
Yeah.
I mean, really. But she recognized that's what it was. It was like, I wasn't brilliant, and you got in early, you got lucky.
And by the way, living in Seattle, there's been a lot of luck because there's been a lot of great companies that have had a great run in the stock market.
I don't know that there's another city in the country that has had more little startup companies become these behemoths. You got way back
sitting around
Boeing
working because it's raining, but who knows what happens.
So many.
Tom and Don are talking real money.
If you're sick of your self-interested financial advisor and are looking for a 100% fiduciary low-fee investment advisor, call my firm Vestory at 800-386-3004 or visit us at vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And our next class is up, and you can register for it right now at talkingrealmoney.com. Click on the events button, and it is an encore of our new The Science of Retirement Investing. It's about a half an hour, and then we do a great Q&A afterwards. This is an absolutely free online webinar through Zoom, and they usually are a lot of fun, and we share some great information on how you should be investing. And so what's stopping you? Just go to talkingrealmoney.com and click on the events button and sign up.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. That's a wrap.